Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Tuesday, June 22nd. Great to have you here with us. I'm your host, Jesse Allen. Thanks for joining us as always. You can find us online, markettalkag.com. That's our home on the web. All of our streaming sources are there, our social media links, our radio affiliates, everything, market news, ag news, and more. Find it all online at our website, markettalkag.com. Well, we got a lot to talk about with the market trade here. An interesting day today. A lot of things on the horizon. Let's bring in our good friend Bill Biedermann with agmarket.net. Bill, good afternoon to you, sir. And it's a wild, volatile market, and seeing more of that on the day here on Tuesday. But I think before we get into Tuesday's trade, overall weather is back in the forefront here, and I know some of the latest forecasts. It's just amazing. You know, we're trading these markets off these forecasts. They're changing so much every 6 to 12 hours, Bill.
Yeah, last night, for instance, Monday night, the forecast went a lot drier, like basically took the rain out of the forecast for most all of Iowa. And so we were higher when I went to bed. And this morning, we're trading lower because now the forecasts are putting in like 1 to 2 inches of rain. And here at mid-morning, the midday forecast comes out and they're saying 2 inches solid in Iowa with up to 13 inches in Illinois. These forecasts are all over the maps, and there continues to be a cold water mass off the west coast of California, which typically means drought. But then you've got the ridge coming down and moving west, and that typically means, northwest flows. So it's just, I know it's hard to forecast. It's even harder to trade.
Well, I know quart of beans faded towards the end of Tuesday's session with that updated forecast, which we would expect, and a good thing we didn't see the quart of bean markets fade any more than they did today. But you talk about some of those forecasts for heavy rains in parts of Iowa into Illinois. You know, from the forecasts I've seen, a lot of that for Iowa is more on the eastern, southeastern side, but there is talk that could drift up into parts of northern Iowa, even southeast Minnesota. It's just going to depend on what happens with that forecast. But that's kind of the one hot spot right now, and is that Iowa crop is kind of on that teetering point. It needs rains, and not just the eastern half of the state, but the entire state of Iowa, Bill.
Yeah, and that's really the key to us right now. We believe that the Iowa crop, if that's involved in deteriorating yields, then this market will move higher very quickly, because you take parts of Iowa, Minnesota, South Dakota, North Dakota, Nebraska, now you're talking about a significant part of our production. You got to remember that you still need, even if you take and add 2 million acres into the equation, which is what we're doing. We're 2.5 million more. So our official number is 93.6 million acres versus 91.1. Even with that, if you go sub-record yield, USDA, remember, is at 179.5 yield. The previous record was 176.65. The second highest record is 174.63. If we go down to 174, we're still losing carryover. We're down to 1 billion bushel. So the demand is so high for this, even with a bump in acreage, it's still going to be difficult to maintain a 1.3 carryover. And so what that does to me, Jesse, is it says, look, we could go down to 174 yield and we'd be right at pipeline supply. But now let's just say there's a problem in Russia or Ukraine or China or South America again. All of a sudden now there's just no grain left, period. And then you would see end users just fall over themselves. We had a huge end user buy yesterday in the market, and When the buyers step in, sellers disappear. In the meal market, just to get these guys' orders filled, meal market rallied $8 off the low while we were putting orders in. That's how fast this thing can rally if the buyers come in.
Well, Bill, you mentioned some of those numbers, and of course, we have that stocks and acreage report coming up next week. And not only are we watching weather, but we're going to start to turn our focus more and more to those numbers coming in here next week. And you mentioned some of the things that we're watching from USDA with acreage, et cetera, et cetera. And there's a lot of numbers coming up in this report, Bill, for corn, beans, wheat, et cetera, that are going to be very, very key, I believe, moving forward the next couple of months. Would you agree with that? What are your thoughts on the upcoming report?
Yeah, I think, if the weather were to turn drier, let's just say we come in next week and we don't get the big rains. Let's say we get half-inch type stuff, and the weather forecast going into the month of July right now is for a drier and warmer period. So if that were the case, I don't think the reports would have much of an impact. I mean, people would be buying it on the fear of reduced yield. If, though, we have a decent weather forecast, wet forecast, and they raise acres more than 3, I think we will see some downside pressure. If you raise the acres by 6 million, you've solved the problem. I don't think that's mathematically possible, but USDA has a miracle math formula that they use. So, could be anything.
Well, Bill, looking here, I've been hearing from quite a few producers just in the last week or two. A lot of guys and gals reassessing their marketing plan a little bit, just with where the volatility is at and where everything's kind of shaping up. What are your thoughts on that? Should producers be reassessing a little bit here heading into this report?
Well, the customers who followed our advice are 50% sold, and they have calls bought against it. So we're really in a pretty neutral position if it's going either direction. So to us, I mean, probably the most conversation we have is, well, I really don't feel comfortable selling any more than 50%. We had a couple of farmers last year that couldn't deliver because they were caught in that North Dakota weather. So reality is, I think a 50% sold position with some options bought against it in case we explode to the upside is a really good place to be. You can sleep at night. You're locking in $1,100 an acre, easy, and that's with the cost of the calls. So how can you go wrong with that? You're making great money. So if you missed it and you haven't sold, I don't think you should beat yourself up. We're still at $5.50. I mean, that's a great price. Subtract the cost of an option, you're still going to clear $5. So, if you can't make money at that, then you probably are buying too many new pickups.
That's some great advice. And, it's a little more specifically on the soybean crop, weather-wise and time-wise. We have a little more time with this soybean crop, just looking at the calendar. Obviously, more the weather concern is in corn right now, but not completely gone for soybeans. But one would think just, generally soybeans have a little more time, but we've been seeing some downward pressure there and volatility thanks to bean oil pressure and the EPA, the Biden rumors with reducing refinery requirements and all that. So that's kind of had an impact on the soy complex as well here, Bill. But overall, it seems like we have a little more time with the bean crop here, and so maybe a little time before we see any wild moves one way or another, would you say?
Yeah, and it's interesting because even with the rain forecast, we saw soybean markets trying to rally, which was pretty impressive, quite honestly. And if the market closes, like we got November beans trading at $13, and today's high was $13.29. We were only a dime away from reversing the chart back up. So $13.40 is like a really key point on the chart now. Without taking that out, we could easily go back down and test where we were last week, which was right below $13. So,
well, Bill, the one other area we should touch on as well, the spring wheat crop, dire straits, I think, for that spring wheat crop across the Dakotas into the Canadian prairies and the northern plains. That's been the one strength of the market here today. Crop ratings just dismal up there in the Dakotas for that spring wheat crop. Any thoughts for growers up there who are dealing with this rough crop right now?
Yeah, let me go back. I just want to correct myself. I said below $13. I meant down around 12.50. So there's a big difference there, but markets are moving 50 cents a day, so who knows. Going back to the spring wheat, it's a serious problem. I deal with a lot of folks up in the North Dakota region, and I'd say probably 30% of the ones I talk to at this point are not planning on harvesting that wheat because it won't even pay to run the combine. So it's serious. I don't think the market has any clue yet of the repercussions or the size of the scope of the problem. You know, it was a frost issue, right? And the markets very notoriously say, oh, it's frost. Don't worry about it. You know, we can survive that. Well, we can kill the wheat crop 3 times or 4 times. It doesn't matter. This is not that situation. This is serious. This is bad. We've got wheat that's just over ankle, about shin high, and it's heading out. This is not good at all. So I think the market, when it really sees what's going on and grasps what's going on, and right now there's no other countries around that have supplies to make up for it. So at this point, I would say be patient on the market, and let's see if the market responds to this. And you know, if today it was a good day up, it was 15 cents up, but I think it could go a lot more than that.
Very, very true. I want to talk to you about cattle a little bit here before we get things wrapped up today. Cattle market very strong on Tuesday. Some good price movement to the upside there. And, you know, we're starting to see a little better cash trade in feedlot country, Bill. Overall, seems like more optimism starting to slowly but surely creep into this cattle market.
Yeah, I have no doubt cattle are going higher. You know, I've talked about this several times. Going in through the balance of the cookout season, I think we're going to see strong demand. We're going to be back in the schools, so we'll see a lot of government buying for meat going into the school systems. You know, we've got a lot of feedlots that didn't replace last month because of the margins. The list goes on, you know, but I think these cattle are extremely solid. I mean, you know, if I had to say where do I want to put my money, I'd say farmland and cattle.
Two good things to put your money into. Cattle also pulled hogs higher a little bit today as well. Bill, I'd like to ask you about the outside markets. I know we had that Fed news last week that was a big driver in the markets, and you know we're continuing to watch the dollar and the Dow and crude oil and all these outside macro factors on the market. Any thoughts there that we need to watch impacting our ag commodities moving forward this week?
Well, absolutely. I think there's the market totally misread what the Fed said. I mean, they said that they're going to be raising rates in 2023, and we had this massive reaction to the marketplace in 3 days right after that release of notes. So, I mean, honestly, this is going to probably happen a year or two out. So that's number one. Number two, the Fed policy right now is they need inflation. They need inflation to inflate asset values, which creates more collateral against debt, which we have a lot of debt of, by the way. And it also, inflation creates investment opportunity, whereas a homeowner can go refinance a home, take that money and buy a whole ton of furniture and everything else that they want to buy. So they need this inflationary period, just like we needed it in the 70s to come out of a great, you know, very serious recession at that point. Once you see that, and as long as GDP growth is exceeding inflation, it's not a problem. You can service all the debt you want. But what they'll do is that once inflation stays at that 2 to 3% level for a period of 6 months or whatever, then they'll start to put the brakes on just a little bit. They don't want it to take off so much that they would have to raise rates to like 4 to 6%, because if they did that, then we can't service the debt. There's too much expense. So it's a balancing act between GDP and inflation. And right now, there's no hurry for them to jump in and start raising rates, but they do need to lay the groundwork to say it's not going to last forever. The dollar misread that, I think. This rally up to 92 cents is probably a selling opportunity.
Bill, great insight as always. Any other final thoughts you have for us here today on Market Talk before we wrap it up?
Well, you know, buckle up, because these 30 to 50 to 60 cent ranges, I mean, $1.20 range the other last week, are insane. I would say just get into a safe position. If you're like us, where you're 50% sold, that's pretty comfortable, quite honestly. And otherwise, you can have very stressful days and you'll be sitting at the kitchen table and your wife will be talking. You won't hear a word she says. Then you know you're too stressed.
Great insight as always. And I know if producers need advice, they can reach out to you and the team there at agmarket.net. You guys have a lot of great tools to help out producers here across the country, don't you?
You bet. We got the app. So just sign on, take a look, get a free trial, give us a call, and we'll walk you through it.
Definitely. All that can be found, phone number, the app link, everything, agmarket.net. Bill Biedermann, thanks for joining us here on this Tuesday. Appreciate chatting with you as always, and we'll talk to you again soon, Bill.
Okay, thanks.
Bill Biedermann with agmarket.net joining us here today on Market Talk. Find us online, markettalkag.com. This has been the Tuesday, June 22nd edition of the show brought to you by Growmark FS. I'm Jesse Allen. Have a great afternoon.